there was some talk that Warsh will try to rein in quantitative easing, that he wanted to.
I think he will.
How does that happen?
I think he will do that in January with the passing of the Genius Act. See, this is the part that the mainstream is ignoring, Michelle. To me, the passing of the Genius Act neuters the dual mandate of the Fed, because the Genius Act says anytime money moves after January 1st, it will be primarily backed by 90-day or less short-term treasuries. You pin the front end of the curve to the floor. And so that mandate of the Fed and their interest rate adjustments, when anytime money moves, it is synthetically creating demand for short-term treasuries. The Fed overnight lending rate, the very, very front end of the curve, will have zero impact when anytime money moves, whether you buy a pack of cigarettes or a new house, it's backed by short-term treasuries. This will paste the front end of the curve to the ground. And so you'll have very, very low rates with the ability to slowly repair your balance sheet. Now, that again would move, let's hope, into Judy Shelton's idea of backing the back end of the market with gold. Mm-hmm. And if that were to happen, you could actually, I mean, this is the argument I've been making, foolishly perhaps, kind of like I did with BRICS in 2019. I don't hear anyone else saying this. So either I fall on the sword, or again, I just have the stupidity or the courage to say something I believe, which is the front end of the curve is done with the Genius Act, as is the dual mandate of the Fed. The back end of the curve would be backed by gold. You would be able then to, if all of the money, and the Clarity Act says you can't transfer the interest. And we see what Tether has been doing, buying more gold than anyone but the country of Poland. And Bo Hines is the CEO of USA Tether, the Genius Act compliant portion of this. He was Trump's crypto czar. If there was a wink, wink, nod, nod deal, and this is a supposition, but if they were to let gold go higher and higher and higher and higher by taking that interest and pummeling it into gold, and that is the deal that they worked, gold goes higher, the dollar goes lower, you sell manufacturing to the public, to the world rather, you bring back manufacturing at zero upfront costs if you can back the back end of the treasury market with gold. And I don't know, to me, it is doable if all of this pans out. July 4th will be a big deal. I don't think I'll go to sleep July 3rd.
You know, Andy, so many of the themes that you've discussed over the years are sort of culminating together, and we'll break those down. I mean, you have long said that you need a weaker dollar because of Triffin's dilemma, because you want to onshore manufacturing, you need the United States
we have to, or our kids are dead.
You've said that. You've said they were going to kill the dollar but save the system by backing treasuries with gold. And a lot of, well, this isn't getting much attention, but it is very interesting that Kevin Warsh, the new Fed chair, has brought on Paul Winfrey.
Yeah, that freaked me out when I saw that. It truly did.
Now, let's explain why. Because Winfrey is a former Trump administration economic advisor, and he authored the Federal Reserve chapter in Project 2025, a conservative paper where he discussed the possibility of introducing gold convertible treasury instruments and even allowing a parallel commodity-backed monetary system to operate alongside the current fiat dollar. Now, you've been talking about this for quite some time, and you've suggested that we could see this happen. And this is the first hire by the new Fed chair, someone that has written extensively on linking gold back to the monetary system. Now, he's been hired reportedly as an interim advisor, just so we're clear. But again, he wrote this chapter in Project 2025 on the Fed. Project 2025 is a policy blueprint developed by the conservative think tank. The Heritage Foundation was developed ahead of the 2024 U.S. election. It got a lot of hysteria from some of the left media. But the nearly 900-page document lays out recommendations for how a future conservative administration could reshape the federal government, and it covers everything from foreign policy and energy to regulation, the Federal Reserve, and monetary policy.
Which was his chapter.
And that's where we're getting to. Now, his argument in the chapter on the Federal Reserve was that introducing gold back into the monetary framework could help restore fiscal discipline and limit the government's ability to expand spending through debt and money creation. And here's a quote written by Winfrey from Chapter 24 in Project 2025. And he writes, Beyond full backing, alternative paths to gold backing might involve gold convertible treasury instruments or allowing a parallel gold standard to operate temporarily alongside the current fiat dollar. These could ease adoption while minimizing disruption, but they should be temporary so that we can quickly enjoy the benefits of gold's ability to police government spending. In addition, Congress could simply allow individuals to use commodity-backed money without fully replacing the current system. Again, no one is saying that the US is about to return to a gold standard, but it's very, very interesting that this hire by the new Fed chair,
first hire,
is advocating something that you have suggested, along with Judy Shelton, could be the solution.
And I don't think we're going to go to a gold-backed system. We're going to go to gold-backed treasuries, which will allow monetary stupidity to continue. However, the gold within the backing of the treasury will be kind of the alarm bell, if you will, to that monetary stupidity. And case in point, you get Van Eck funds, their emerging bond market team came out and wrote a report and said if the dollar loses reserve status, Triffin's dilemma, we could see gold going to $139,000. So when Judy says, we can sell a 50-year bond deliverable in gold or dollars with zero coupon at the end of the 50-year period, and in her book she said 5, 10, 20, 30, 50, but starting with the 50, that means zero upfront borrowing costs, number one, because there's no upfront, you just sell the bond, you get the money. You have to deliver the gold, no interest payments, but gold at the end of the maturity. If the dollar continues to lose value because the interest that is not transferable is piled into gold, pushing gold higher and the dollar lower, gold being the only neutral barometer, the only neutral reserve asset by which everything is measured, yeah, I think this can actually happen. But it allows the Fed to continue, it allows monetary policy to coexist with gold backing of the treasury market, not backing the dollar, because that's when you can't expand the money supply if there's not enough gold. However, you can still do that and sell bonds redeemable in gold. That is the whole purpose of having the redeemability in gold, because if the world believes that we will not find fiscal sanity or monetary restraint, then indeed they will choose, the gold instead of the dollars or any small interest attached to it.
Why would they be forced to consider something like this now? Are we at that point?
Oh yeah, we're past that point. I mean,
in terms of reality and $39+ trillion of debt, yes, but in terms of perception.
Well, $39 trillion in debt. Don't forget Medicare, Medicaid, Social Security, government, military pensions. We're at $200 trillion in debt, and we have already shown the world that if we don't agree with you, we'll sanction you and we'll kick you out of SWIFT, and we'll even maybe freeze and or confiscate, which is a form of default, on your U.S. treasuries. So no question about it, it is a combination of too much debt accumulation, the inability or massive reluctance to show any form of austerity. And you look at Doge, who comes in and cites $2 trillion in cuts, and they can only find a few hundred billion, which is not even a few days worth of trading or spending by the government. The world realizes that we are in a pickle. And I think this administration understands that. And how do you get to a point where you can flip the script? My mentor, Richard Russell, said, Andy, the Fed has two choices. This is years ago. They can inflate or they can die. He said, because there's only three ways out of debt. One, you produce more than you consume. Well, that's never been our case. Maybe that's what they're trying to do. You inflate or you default. But to get to the part of producing more than we consume, because we've offshored everything because of Triffin's dilemma, is going to take a Herculean task. It's going to take time. And so you start by backing the treasury with gold to continue to facilitate investment in the country. At the same time, you can start to pare down your balance sheet. You can do the austerity. You can do these things because the front end of the curve is being synthetically hammered to the ground through money movement. It's diabolically genius. I mean, if I had to guess, I would say it's going to happen. Now, I've been disappointed before, but everything points to me, this is their one path out where you can inflate and you can also bring back manufacturing to bring back your ability to produce more than you consume, because we're so far past that. If we don't, the fat lady is singing, she's warming up. But in terms of the whole plan, yeah, there's a gap where it's going to be tough. but you can look your children in the face and say, you know what, you and your kids will have a future if this goes through.
Well, let's talk about timing, because Judy Shelton, who was a former Fed nominee under Trump in the first administration, she suggested that this could be done July 4th of this year, under the 250th anniversary, as some kind of jubilee type of product, if you will, and you can frame it in a very nice way. Do you really think that we could be seeing it this July 4th? Last year, you made a prediction. You said that this would be obviously the big thing you'd be looking out for in 2026.
I won't sleep July 3rd. I guarantee you.
What are the percentages that you're giving this? What are the odds that you're giving this now?
50-50.
50-50. That's very damn high.
And it's higher than I would have said before this hire was made. And also before all of the entertainers, you know, these idiots who just disrespect the country by backing out at the 12th hour. And now Trump said, fine, I'll give a speech. What better time than to lay out this framework? I don't know. It's asking a lot.
So a 50-50 chance that come July 4th, Trump announced a gold-backed long-term treasury.
Yes, I think if you put the pieces together with the Genius Act, the finalizing of the Clarity Act, interest can't be transferable, so the issuer has to hold it. What is the issuer, the primary issuer, Tether? What have they been doing? They've been buying more gold than anyone in the world but the country of Poland. And could that be? Remember now, look, there's a fine line between conspiracy and reality. And I'm not trying to be tinfoil hat, but you remember Tether was in big trouble by the Justice Department for a while. They were being investigated. Where'd that go? And now Bo Hines, Trump's former crypto czar, is CEO at USA Tether, which is Genius Act compliant. Could it be that this deal was done? You guys are going to take this interest, you're going to buy gold, you're going to sell it to the Treasury, so we don't have to go into the open market and do it and make it be too transparent. You're going to run proxy for us. We'll end up with the gold, you'll end up with the money, you're no longer under investigation, you'll sail off into the sunset in your mega yachts, but you're going to do this for the government. Could that be? That's what I think is going to happen. Now, again, I'll fall on the sword if I'm wrong, but if I were running this country, that's exactly the way that I would go, because if not, our future is becoming bleaker by the day. And I don't care what people say about AI and automation and increased efficiency at the K-shaped level, where the rich get richer and the poor get poor, because the rich find maximum efficiency. Those business owners that survive, they make a gazillion, and everyone else struggles to find a job in the face of increased automation and robotics and all of these things. If we don't bring back manufacturing, the future in this country is not what it was when I was a kid, for sure. And I have young kids that I'm concerned about their future. This gives us a chance to bridge the gap between consuming far more than we've ever produced to switching the tables like we used to be and producing more than we consume.
I just want to clarify for the viewers that are not familiar with Tether, that is the biggest issuer of stablecoins.
Correct.
US-backed stablecoins, which are critical to crypto, to anything in the crypto ecosystem. You convert other currencies back to stablecoins in any kind of transaction that you do on the blockchain. And what the Genius Act did was it made sure that it's legal, and they're tied to treasuries, and they had to be backed 100% by U.S. short-term treasuries.
Well, a little bit of cash, but majority short-term treasuries. But the point of it is you've created synthetic demand for the front end of the curve.
Which many have said is the way to maintain the dollar's role as a reserve currency.
See, I don't believe that. I don't believe that.
But here's what's interesting. Could we still have the dollar as a unit of exchange, as a medium of exchange, as a unit of account?
Yes.
But have gold as that neutral reserve asset.
Yes, because the reserve is in gold, and if you hold the dollar and think it's going to preserve your purchasing power, you might as well hold a melting ice cube in your hand.
But isn't that the genius of the system?
Yes,
the genius
genius
of this act is that you maintain the dollar as the global reserve currency.
And what have we heard now what did we just find out? That Enbridge is now being launched, right?
We were going to.
Okay, so Enbridge is coming out, but the CIPS, cross-interbank payment system, has already been released. China signed up the countries in Southeast Asia, the Asian countries, which are their largest trading partner by far. 800 million people, twice that of the United States, are now using CIPS. you're seeing all of these countries sign deals to trade unilaterally with one another so that you have local currencies trading with one another. And instead of one currency, everyone trades their own, and the settlement vehicle is gold instead of US Treasuries. That's what it's going to be in the global South. And I think this is I think that this administration is happy with that. In other words, you soft default on the reserve status of the dollar. You maintain the dollar's use for trade and for a unit of account. But if you save in dollars, you're going to go broke. And I think that's where gold comes into play, because people would say, well, what the hell do I want to hold treasuries for if they're inflating away and they're changing the metric by which we gauge inflation? Screw it. No, fine. Here's gold. We'll peg it to it. It's deliverable. Boom. You just all of a sudden fixed all angles. And I don't know, to me, it's very simplistic. It's very elegant. It's very easy. It would work, I think.
I mean, Luca Groman encapsulates it very nicely. He says, behold the new global monetary system where the store of value function is separated from the medium of exchange and unit of account. USD remains most used global currency. Gold becomes most reserved global asset.
Yes.
And you and I have been talking about de-dollarization.
It's de-treasurization.
Exactly.
And that's not a word, but it is.
It is now. We've just coined it.
It is. It's more treasuries than it is dollars, because the rails of the dollar system are robust. Now, when you look at Enbridge and you look at SIPs, the rails are being built slowly to challenge that, but we're still a ways away from that. And so the milkshake theory, as an example, it has value right now. There will come a time where I think all of a sudden the world says, well, geez, maybe I don't need to trade primarily through SWIFT, and we can use other systems. And other systems are being built. It is the treasury that needs the backing of gold, not the dollar. The dollar doesn't need it. And if these entities are smart, they don't hold dollars very long. They trade with it and they switch it to an asset.
Well, we have seen that gold has officially surpassed US Treasuries as the largest reserve asset held by central banks. We've been reporting on this for a while.
It's probably much bigger because they lie about what they
But the ECB has just now come out and confirmed that as well. So just another confirmation of a trend that we've been focused and highlighting for a while now. Before we get into the replacement of the financial architecture, again, another trend that you were very early on to focus on and elaborate on. What is involved in terms of legally saying gold-backed treasuries? Who has the authority to do that? Is it the Cent? Is it the Fed? Is it the president?
That's a question I do not know. That's a good question. I don't know that. I mean, the way that it has been framed, the way that it has come out, I guess it would be a decision between, it's not been framed that it needs congressional approval. I'll put it to you that way.
So it's the Treasury Secretary.
I think it's the Treasury Secretary in conjunction with the president, and maybe even in consultation with the Fed, if I had to guess. But
we do know the Cent is a gold bug, a self-proclaimed gold bug.
100%. And, he said, we're not going to revalue gold. Now, think of the genius of this. No, we're not. But we're going to set up a proxy who's going to buy the crap out of it because the interest is not transferable. That proxy, which would be not only Tether, but JP Morgan and Morgan Stanley and all the banks that are going to issue their own stable coins, they'll all do the same thing. They'll push gold to the moon, and a large portion of that gold is going to end up back with the treasury.
Did he explicitly say we're not going to revalue gold, or did he say we're not going to? Well, at first he said we're going to monetize the assets.
Right, and we're not going to revalue gold. He said we're not going to revalue gold, which would in essence be monetizing it, because it's still valued at 42.22.
But what if you just marked it to market? That's not revaluing
different. That's correct. And I think that's ultimately what they will do. And I don't know if that's going to happen right now or not. Maybe it shines too much light on things. But the minute they roll out
would have to happen together.
Yes, the minute they roll out the treasury, they will market to market, and then allow, through the devaluing of the dollar, all of the interest going into gold pushes gold higher, devalues the dollar, allows manufacturing to be sold to the world like everyone has done to us, and allows the debt to be paid off easier. And then at the same time, if they back the back end of the treasury, allows for zero upfront borrowing costs to reinvigorate our infrastructure of manufacturing, to build it with no upfront costs. As gold goes higher, like Van Eck's fund says, 139,000. If you sell a $20 million bond right now for 20 years, it's about 4,500 ounces of gold at current prices, but at 139,000, it's like 120 ounces of gold in 20 years. So everything works out, including the amount of gold you have to pay back at the end.
What does that mean for the price of gold if they announce this?
it starts to go higher and higher and higher and higher. And I think the way that they do it is organically. It's synthetic in nature, but organic in its movement, because it will be moved not by government edict, but by this synthetic appreciation of or accumulation of treasuries, and the interest having nowhere to go but plugging it into there, which is self-serving for the government, for manufacturing, for Tether. Everybody wins in this except, I guess, those who are shorting gold.
And you know who also wins? China.
Yeah.
China still wins in a way.
Of course they do.